So we will be able to take a few questions. As a reminder, please turn on your microphones and do introduce yourself. Okay, way up there, and second from the back row. I can't see who it is exactly.
Hi, this is Shane DeRace with the Wall Street Journal. I was wondering if you could talk a little bit about the September rate decision and maybe what you think we should expect going forward till the end of the year.
Where are you?
I'm over here.
Oh, hi. Okay,
Hi.
sorry. It sounded like you were being piped in there. Okay, so I'm not going to devote a lot of time to that, but I will answer your question. In my view, the economy is in solid shape and continues to gradually improve. My thought is that we can continue to be patient. Inflation is below our target and has been for 5 years. We're also in a global environment in which growth is weak and there are deflationary forces around the world, really. That all said, I do support, if we remain on essentially the current path, it seems to me that the correct path going forward will be a path of gradual rate increases. So that'll all depend on the economy continuing to perform well, which is how I see it performing now. Other questions?
Mike.
Governor, Mike Stevens from the Conference of State Bank Supervisors. You mentioned capital simplification. Your colleague, Governor Tarullo, seemed to kind of kick that concept off, that idea, through the Agrippa process. It's not lost on anybody that would have to be a interagency type of rulemaking, and only the Fed has talked about it. Could you comment on kind of how you see that playing out, where it is in the process, and what you think that the state regulators and the industry could do to be helpful to that debate?
I don't think it would be helpful to speculate about it at this point. These are conversations, and they're underway. And I'll just say that I'm hopeful, and I think do expect that we'll be able to achieve a significant simplification. Other questions? Sir.
Governor Powell, I'm Harold Miles, work for a community bank here in Missouri. What degree of regulatory tailoring or tailored regulation could be experienced without legislative action? What kind of relief can actually occur without Congress having to take action?
So it's the Agrippa process has been particularly interesting on that question, and we actually have a subcommittee which I chair of our bank of the board that looks at its role is really to make sure that the regulatory and supervisory things that are designed to be aimed at the largest banks don't sort of flow to the small and medium-sized institutions. So, and it's something. This is not a new idea, but the Agrippa process, I think, has really forced all of us on the board to more systematically, and frankly, all the other regulators too, to systematically go through the things that we do. And it turns out that there are a number of things. There are limits, of course, but I'm sorry to answer your question at a general level, but there are things and things we can do. There are also legislative limits. For example, the Collins Amendment is something that you have to navigate in thinking about a simplified approach to capital for smaller institutions. That's one thing. I also think, as a general matter, we have more flexibility to tailor in safety and soundness regulation than we do, for example, in consumer regulation or BSA AML. We have less flexibility there than we have in safety and soundness regulation. But it has to be a balance. We need to be good, strong regulators, but we need to be conscious that we're not adding regulatory burden that doesn't really move us to a safer and sounder institution. I just want you to know we are conscious of that. We do try hard to move in that direction, but it's never a battle that you win. It's just something you have to focus on every day. I hope that's responsive, although not very specific. Sir, one more question.
Alan Berger, University of South Carolina, and former Federal Reserve employee. I also mentioned one of the factors that you only very briefly mentioned that affects this consolidation of the industry is economies of scale. And I think that the economies of scale have continued, and they're going to continue, and you see the long-run path. There's going to be consolidation in the industry. One thing that you mentioned that you're doing, which I appreciate, is reducing the regulatory economies of scale, making it easier for the small banks, and I think that's a great idea. But the technological economies of scale, I think, cannot be reversed by anyone. My question is, one, do you agree with that? And the second is, what do we do about access to credit for small businesses that require relationship loans, that don't have the hard information available to them? Is there any other policy that can be done to make sure that small businesses have the wherewithal to continue to grow our economy?
That's a great question. So I thought actually at least two of the papers yesterday were really interesting on fixed costs, economies of scale, and it's clearly a real thing. So I don't know, and I don't know whether it's what all they are. It may be a lot of technology as well. You just need to have a minimum amount of technology to compete. I don't know that, but it's definitely a thing. Although I thought that one of the papers pointed out actually that small business lending in their model, this was the one that Loretta Mester was a co-author on, small business lending in their model was actually more attractive for larger institutions than it was for the smallest institutions. So I'm not sure that, let's say that that's right. Let's say that not only are there economies of scale, but that minimum level is increasing as regulatory supervisory expectations and maybe the need to invest in technology raise that bar. Perhaps, let's just stipulate that's right. It doesn't necessarily mean, though, that there will be less small business lending. And in terms of other, I'm going to say that the question of other sources of small business lending, I'm going to go away and think about that. I can't really get to that in this. But anyway, great question. And all of them are. Thank you very much. Sorry to have to run. Thank you very much. Thank you.